Welcome to Han Invest TV. Today, we will decode the massive difference between those who build wealth and those who fail entirely. Let us travel back to the turbulent year of 2009, right after the devastating global financial market collapse. We meet two ambitious 27-year-old individuals facing the exact same terrifying economic landscape, yet they made completely opposite choices. The first investor, overwhelmed by endless negative news and deep fear, decided to pull all his cash out of the market. He believed hiding his money under the mattress was the only safe way to survive the ongoing, incredibly catastrophic economic winter. Meanwhile, the second investor chose a different path. Despite the intense panic, she committed to investing $500 every month. She ignored the daily noise, focusing entirely on accumulating strong assets while everyone else was busy selling them at massive discounts. Fast forward 11 years, the global economy has recovered, and the results of their vastly different choices are absolutely staggering today. The fearful investor who hoarded cash ended up with a meager $18,000, losing massive purchasing power to relentless inflation. In stark contrast, our disciplined investor watched her portfolio explode to over $210,000 in total value. This incredible gap was not created by luck. It was built purely on emotional control and unwavering consistency during terrifying times. Now let us fast forward to our current reality in the year 2026, where panic is once again spreading rapidly. We are facing severe military conflicts overseas, which have sent global shockwaves through the interconnected financial markets and disrupted vital supply chains. Oil prices have violently spiked to an alarming $118 per barrel, squeezing the wallets of everyday consumers. Inflation dominates the headlines once again, making average citizens feel like their hard-earned money is slowly vanishing into thin air. Turn on any news channel and you'll see experts predicting the absolute end of the financial world as we know it. Fear is a highly contagious disease. It tricks your brain into making terrible long-term decisions based on temporary market pain. People are terrified that we are repeating the horrific economic stagnation of the 1970s, but the actual data says otherwise. Let us look at the cold, hard facts. Unlike the 1970s, our current unemployment rate remains remarkably low and stable. Furthermore, the gross domestic product continues to show incredible resilience, proving that the underlying economic foundation is much stronger than perceived. The modern economy is driven by massive technological advancements that simply did not exist during the dark days of the 70s. Therefore, comparing today's market fluctuations to that specific historical period is fundamentally flawed and incredibly misleading for any serious long-term investor. To truly understand how markets react to global panic, we must study the undeniable power of objective, long-term, historical financial data. We have thoroughly analyzed 20 major global military conflicts that have occurred since the year 1950 to find hidden market patterns. In almost every single instance, the initial shock caused a rapid and terrifying plunge in stock prices across all global market indices. However, the data reveals a fascinating truth. On average, the stock market completely bottomed out in just 13 active trading days. Even more astonishing is the recovery phase. Markets typically erased all their conflict-related losses in an average of 28 days. This means that those who panicked and sold their shares completely missed out on the aggressive and inevitable upward market recovery rally. The stock market is essentially a forward-looking machine. It prices in the worst-case scenarios immediately before bouncing back surprisingly fast. If you let temporary geopolitical events dictate your permanent investment strategy, you are mathematically guaranteed to destroy your future true financial independence. So, how do we actually capitalize on this widespread fear? It requires a calculated, emotionless, and highly disciplined strategic market action plan. Step 1 is building an unbreakable foundation. You should allocate 40 to 50% of your capital into broad market funds. Specifically, we're talking about low-cost index funds that securely track the legendary Standard & Poor's 500 Global Market Index. Investment funds like SPY and VOO give you instant, diversified ownership of the greatest 500 American companies. By doing this, you are essentially betting on the unstoppable long-term growth and innovation of the entire human economic advancement engine. Step 2 involves becoming a predator in the market. When fear drives prices down, incredible individual buying opportunities suddenly appear everywhere today. You must aggressively target extremely high-quality companies that possess massive, undeniable competitive advantages over their struggling industry peers during market downturns. Think about the untouchable tech giants. Microsoft provides the essential software infrastructure that literally keeps the entire modern corporate world running smoothly. When Microsoft's stock price drops due to temporary macroeconomic panic, it's not a crisis, it's an absolute massive financial gift. Then look at Amazon. They absolutely dominate global electronic commerce and cloud computing, making their business model incredibly resilient during economic storms. Meta owns the attention of billions of daily users worldwide, creating an advertising monopoly that generates massive, consistent free cash flow daily. Google controls the world's information flow. Their search engine dominance ensures that businesses will always pay them for targeted digital visibility online. These are not speculative gambles. These are incredibly profitable cash printing machines that are currently being sold at a ridiculous temporary discount. The secret is simple. Buy world-class assets when the general public is too terrified to even look at their brokerage accounts. Warren Buffett famously said to be greedy when others are fearful. This is exactly what that timeless investment philosophy looks like today. But knowing what to buy is only half the battle. The true test of an investor is unwavering, absolute mental, emotional discipline. You must continue to invest your hard-earned money even during the absolute darkest, scariest, and most volatile months of the year. When you see your portfolio bleeding red, your biological instincts will scream at you to sell everything and run for total safety. You must completely ignore that primitive survival instinct. In the financial markets, running away from the fire means permanently burning your wealth. Let us do some simple, powerful math to understand why market crashes are actually your best friend as a long-term investor. Imagine the overall stock market suddenly drops by 30%. Most amateur investors will panic, cry, and liquidate their entire investment portfolios. But for the disciplined investor contributing a fixed monthly contribution, this 30% drop is a magical wealth-building acceleration event today. Because prices are significantly lower, your exact same monthly dollar contribution will magically purchase 43% more shares of great companies. You are literally accumulating nearly half as many more assets for the exact same price just because other people are incredibly terrified. When the market inevitably recovers, and it always does, those extra accumulated shares will act as massive multipliers for your future wealth building. This mathematical reality is the ultimate secret weapon of the rich. They use market crashes to rapidly expand their massive ownership stakes. The rich understand that volatility is not a measure of risk, it is simply the price of admission for extraordinary financial returns. We must train our minds to view red days in the market as massive clearance sales on the world's greatest financial assets. If your favorite designer shoes went on sale for 30% off, you would rush to buy them without any fear today. Why should purchasing shares of the most profitable, dominant companies in human history be treated any differently during a market panic event? The answer lies in psychology. We are biologically wired to follow the herd, and right now, the terrified herd is running away. To achieve financial independence, you must consciously choose to separate yourself from the emotional, irrational reactions of the average retail market investor. Let us quickly recap the blueprint for surviving and thriving during this current intense global geopolitical and severe economic uncertainty. First, remember the tale of the two investors from 2009. Consistency always destroys fear over a long investment time frame. Second, recognize that current economic data regarding unemployment and gross domestic product remains highly supportive of a fundamentally strong, resilient global economy. Third, trust the historical data. Markets have survived and thrived after 20 major wars, recovering their initial losses incredibly quickly every time. Fourth, build your core portfolio